Hey guys, welcome back. In this video, we are talking about AMC climbing, the collaterals failing, short squeeze season, and many more in this video. First, we're taking a look at this. Funny, the AMC popcorn pass made AMC jump both today and Wednesday. So we're taking a look at another news article which talks about how AMC and its climb today of 6.52% was due to the fact of launching AMC popcorn pass to boost customer loyalty, outperforming the sector's 0.61% gain. So they already talked about this for Wednesday's increase. We talked about it. So when AMC went up 1.77%, that's what they were saying was the reason. Now, for today's reason of 6.52, they're using the same reasoning again. And this is something that we have already talked about with how ridiculous this is and why, if this is the reason that they're giving for why AMC is going up, then the whole premise of what they've said for AMC throughout the last few years has all been a lie, and that AMC's price is completely wrong. The reason why I say this is because what we have seen right now is how AMC has already shown themselves with record attendance, with beverages and all these concession revenues going up, and how they're improving and projected to do more. These are news we've seen in the past, yet it had no movement, it had no impact on AMC's price whatsoever. But because recently, due to the liquidity issues that these short sellers are having, due to their collaterals failing, which is causing AMC to climb up, they're now using these reasons. So now they're saying that fundamentals matter for AMC. But yet, throughout the last 4 or 5 years, every time AMC has shown great fundamentals, it has never mattered at all. And we know this because there has been plenty of times where AMC earnings have shown how we beat estimates, have shown how we beat the consensus, have shown how we're showing improvements, have gone up, so much, yet the moment the stock started trading, it was actually red. And so for them to actually say that this is because of a popcorn pass, it should really tell you a lot about these news articles and what their aim is and just how wrong they are. And so this is why we've said that we need to understand the articles, the information that we are consuming. Another interesting thing about this is what we're looking at here is AMC hit 74.49% off exchange. So when most of the volume is routed away from lit markets, it's tough to see true price discovery. Now, this is something we have always talked about, but the reason why I'm bringing it up today is how interesting it is. So 74% for off exchange, yet we were seeing AMC up 6.52. Now, we've already known that dark pool, along with FTDs, synthetics, these locates, the tokenizations, all of these things paired together are what's used to suppress AMC. And dark pool has been one of the main factors because it removes a lot of buy orders that should be affecting the market. Now, despite the fact we saw a 74% increase, or rather a 74% usage on the dark pool, we still saw AMC go up 6.52%. That should be a very good indication. And a lot of this is to do with the fact that shorts are facing illiquidity issue. But now you can understand why we talked about with the collaterals failing is extremely important for AMC. And now another thing for AMC, and this is something that articles are not talking about, and if they said that fundamentals matter, then this should be something that's very important, is the fact that I think it's safe to say AMC is now in the money on his HYMC investment. So we have seen how great HYMC investments have been doing for AMC. We're seeing the projected market as well. Something we'll talk about along with the rest of this today will be, of course, about the gold and silver market. But you can see how AMC's investments is doing well. But yet this is what they're failing to talk about. Now, you can see how a lot of the things, all these news articles that they try and talk about AMC are things that aren't actually got to anything related to do with money. So what I mean by that is, if AMC had the capital, they were able to increase in these investments. They were able to increase in these infrastructures. Because one of the things about this popcorn pass is that it actually doesn't cost any money for them to do this. And the reason why they avoid any money fundamental factors news about AMC is because they realize how well that can affect AMC. Especially with what we talked about with how AMC and its ability to, if they were to be allowed to authorize more shares, issue more shares, and then raise money that way, that would obviously generate them a lot of money, and these money will then be used for investing into their business structure, investing into other business ventures, or anything else that will fundamentally improve them. And so we know this, the shorts know this, the news articles knows this. And so that's why they avoid saying anything that's to do with capital and fundamentals. And so the only thing they can talk good about AMC is things like this popcorn pass. And so if you think a popcorn pass is allowing AMC to not only go up 6.52% today and another 1.77% on Wednesday, and it's all due to a popcorn pass, then you should obviously understand that these news articles are willing to get you to think of a wrong narrative because of all of these fundamental factors that we have seen in the past before. But now another interesting thing, GME, so up 3.84%, Nvidia down 1.78%. I'm telling you, the big boys use Nvidia shares as collaterals for the GameStop swaps and derivatives. And now this is what we talked about as well. Nvidia, these massive stocks, especially Nvidia, have been used as collaterals for AMC and GME. Now, granted, this user only mentioned GME, but I think AMC is definitely in there as well. And the interesting thing about this, you can see the correlation. Every time we see these big stocks, so in this case, Nvidia, going down, you're seeing how AMC is going up. You're seeing how GME is going up. And so two completely unrelated stocks, as they're in different sectors, they're in different industries, yet there's a common factor that's between them. It's when Nvidia, the collateral, something that we talked about in the past before, the collaterals that is used to short AMC and GME, when we see that go down, we see AMC and GME go up. And so this is what we've said, that it has nothing to actually do with this popcorn pass, but rather the fact that these collaterals being removed is showing just how strong AMC investors truly are when the shorts aren't using a $4 trillion stock, a $5 trillion stock as collaterals to short AMC, to short GME. And this is why we're seeing Burry shorting Nvidia and started posting about GME, which we'll get on with very soon. So this should really highlight the usage of collaterals and the importance of collaterals, and why we always talk about what shorts use these for and why it's important to keep an eye on it. So yesterday's video, we talked about how Michael Burry talked about GME, in which he shares a letter between one he sent to GME and another one with exchange to Roaring Kitty. But something else I didn't mention is how he talked about it was complicated with GME in some ways I wasn't really done in Q4 of 2019. So if you are relatively new, or if you didn't join this journey along with AMC, along with GME at the very start, something you wouldn't know was that along with one of the investors who bought into GME, the most well-known one would have been Roaring Kitty, but Michael Burry was also a long investor of GME. And now he's talking about GME again and his relationship with the fact he's shorting Nvidia, and with what we talked about with the Nvidia collaterals is giving a lot of hints right now. And you can see furthermore, breaking, Michael Burry confirmed he's going to tell the whole GME story. So someone mentioned GME, a recent tweet was interested, are you buying back in which he replied, I'm in the process of creating a post to tell the whole GME story. Now, the reason why I think this is very significant is to do with what we have just been talking about throughout this video. So firstly, he said he wasn't done with GME in Q4 of 2019. Secondly, we've known how he take a massive short position in the AI sector, especially Palantir and Nvidia. And now he's talking about GME. And we talked about how Nvidia, along with all of these other tech stocks, are used as collaterals. So if he's talking about GME and he's shorting the biggest collateral used to short GME, you start to see why things are linking together. And a lot of people are responding to this. You can see large volume candles after Burry announces he'll tell the full GME story. And I'm not going to say that he is the sole guy to have impact, because we did see Nvidia go down. So that definitely had a bigger effect. But we are seeing how people are now seeing what's going on and they are more aware. And you can see 26 calls just ripped 4% for absolutely no reason, no news, no catalyst, no headline, just vibes and destiny. And this is what we've said with how so much volume is already being shown. There are indications of people's awareness, of people's indications, and their prediction on GME. Now, the same applies for AMC as well. We've already known that AMC is up 6.52% on no really significant news, because yes, this popcorn pass is something that's good for AMC. It's an incentive to increase the popcorn revenue, but it isn't something that should bring AMC up 1.77% and then leading to another 6.52%. There's obviously more to that. And a big thing could be what the whole market is indicating to us recently. Breaking, silver price surges to new record high of $55 per ounce, now up 90% in 2025. Now, this has been the headlines today because of what it's actually doing. So some of the things we talked about earlier was AMC's investment in HYMC. And so this is something that's definitely going to affect that, but it has a bigger thing than that. It's about what is done onto the market, because we saw how the COMEX silver price was actually halted. So the moment it hits all-time high, they are now having technical issues. So the thing that's interesting about this, because of firstly, the awareness is brought. So many people care about market manipulation when it's not just meme stock anymore, huh? Fun times we're living currently. So this has firstly brought a lot of attention on market manipulation, because the fact it's halted because of these technical issues, and the fact that it's to do with because an instrument reached all-time high. Something that we, the apes, would be familiar with because it's happened multiple times to AMC and GME, and we shouldn't forget about the times when AMC was halted so much in one day. And so this is now firstly brought attention. But then if you dig deeper, it's firstly, they're blaming that this was a technical issues due to a cooling issues at the data centers. However, with what other people are saying, now none of this can be 100% confirmed. But this is what people have been saying. Firstly, is that the GME glitches when silver was about to break out, but later gold also prints a $40 liquidation wick twice and instantly recovers both times. That's not real selling, that's market plumbing under maximum stress. And so the first thing about this is the fact why people think it isn't actually a technical issue but market manipulation is because of how much stress is brought on to the market, how many potential big players, in this case institutions such as banks and hedge funds, could get easily liquidated because of these positions. But then, just Dario said, just spoke to a commodity trader and he said the glitch excuse is BS. Silver's futures books was very thin, then the trade cleared at the offer side with no quotes left. According to him, CME is giving time to market makers to reposition and avoid a price print off the chart. And so this is what we've said with, there are so many things speculating right now. Now, none of this can technically be confirmed, but when you take a look at what's happening, and especially if you've researched enough into AMC and GME, and we've seen how when something poses a threat that could easily take out institutions, you start to see these glitches happening. And so in this case, when we know that multiple institutions could have been liquidated and a glitch that started happening, it starts to make a lot more sense. And you can see GME holds futures trading for the whole night and only resumes at the exact moment banks borrowed $24.4 billion of liquidity from the Fed standing repo on a half-day trading. And so there are so many coincidences that are happening here. And the very fact we just talked about how this could easily cause liquidations, and you're seeing this being halted, and then you're seeing how liquidity is used to being injected and that people are borrowing this, and then everything starts resuming, you start to see what's actually happening. And so this is another reason why we've said that AMC and GME is going up today, because there were signs of liquidations for these institutions. And this is to really highlight and just show the importance of liquidity and why if we were to see a massive illiquidity issues, AMC and GME will be the biggest benefactor of that. And this is why we focus on this. So you can see 24.4 billion borrowed, talk about liquidations. We talked about how Nvidia was down, and that's why we saw AMC up 6.52%. And then another thing to then focus on is that on top of this is MBS repo of 13 billion on a random Friday is not normal. Now, of course, I want to say that it's a bit more than the random Friday because of what happened with the market, but this is something that is clear. Dealers are starved of clean collaterals, banks are hoarding treasuries, Mortgage books are under liquidity stress. Some may be in margin stress on housing-linked exposures. And so many different markets. Now, these are all things we've already highlighted. So we've already talked about the silver and gold market for a while now. It's just that today it had a very significant moment. But something else we talked about is the housing market as well, especially with the commercial housing market. And we talked about how that has had a massive effect, how we've seen multiple firms actually being affected by that. And this is just another show of that. Reverse repo at 7.5 billion. And now it's gone up from 2 billion. But like we said, there is nothing to be worrying about because we knew that this was going to go up today. And we've already said, when we do see it go up, it should just show you that there is a lack of liquidity and that these banks need the money. Because we've already shown with how banks have said they don't want to accept money from the reverse repo because it shows how desperate they are. And so if it is their only last resort to accept money, and so when we do see the treasury go up, you start to understand just how desperate these guys are. But this is really what we have been saying this whole video and how everything links into one. You can see how these are all different data points that we're showing, but they're leading to one thing, which is the lack of liquidity. And so by now you should understand how liquidity, how this capital issue, how the collateral issues is something that's deeply tied with AMC and GME. Also, will the Bank of Japan ever be able to stop market interventions? The tally rises to 138. We also talked about the yen carry trade, how that's going to cause liquidity issues. And then a big thing, Ken Griffin dumps Chicago penthouse a 44% loss. But instead we get the headlines below as the media tries to put a positive spin on Griffin's 15 million loss. So firstly, we just talked about all of these collateral issues that are showing how institutions like banks, like hedge funds, are in a bad situation. And if you want to see how badly it's affecting them, we're seeing Ken Griffin getting rid of a penthouse at a 44% loss. Now, I wouldn't normally say this is a bad thing because maybe he doesn't care about this 15 million loss. But it's the fact that the articles are trying to say it's a good thing. When we're in a market like this, it should really show you just how bad it is, because we already know with articles like this that these media articles clearly have no idea what they're talking about, and it just shows like they want to create a false narrative just to make the media believe the complete opposite thing. Now, as always, this is financial advice, so do take what I say on yourself. Make sure to do your own due diligence and research. And if you want to know more about why AMC can go to $180 per share, check out my last video. As always, thank you for watching. I'll catch you guys next time.